Hello, this is Jay King, self-made millionaire, coming to you from millionairepenny.stocks.com, and I want to talk to you about breakouts. People are asking a little bit about breakouts, and let me just simplify it for you. A lot of times, companies every quarter they report earnings, and anytime a company reports earnings, if those earnings are reflective of their financial disposition, and the earnings look good, then it reflects in the stock price. And so what happens is, if you notice, look at BLFS. This was a stock that I played the breakout today, but notice that this stock is normally in between 151 and 164. If you look at the historical quotes, or even if you look at a chart or a graph, you'll see the stock basically between 150 and 165. But notice when the company reports earnings, notice here in July the 11th, notice 17 million shares on a daily basis. That's a lot of shares that are being dumped into this stock in one day. Notice before the company reports earnings, we only have an average of anywhere from 2 to 5,000 shares. And look at this, June the 22nd, only 200 shares in one day. But notice the activity. A lot of times people aren't watching the stock market throughout the day. They just hear news, and a lot of times you'll get people just invest in a stock randomly because they hear information or news. But one of the things that I do as a trader is I watch charts. So anytime a company reports earnings, or they report a better position in their financial disposition, or even if a catalyst or press release comes out that's in favor of the company, it does have an impact on the stock price. So today I will show you BLFS was a stock that I played the breakout on. Look here, BLFS. You'll see here that I bought at 229, but I was playing the breakout. I want you to see this. Between 2 and 240, it went all the way down from 240 to about 228, 229, and found support. And it didn't break out. So I tried to get between 2 and 240 and see if I could get a spread. So what eventually happened was the company failed to break out based on the news, based on the earnings. And so I just exited the stock. Normally, what happens is anytime you enter into a stock in the morning, I want to say this: when you're playing the breakout, never buy a lot of shares. Never buy a lot of shares because penny stocks are very volatile. And so you want to go in the morning with a small amount of shares because many breakouts can jump up $2, $3, $4, $5 when companies report earnings. Now, if this does not happen, if this is a failed breakout, in other words, once the news was released, I saw a reflection in the stock price. I entered in at 229, but when I saw the resistance levels, that just simply meant that from this point, when I entered in, it could not break past 230, 231. I recognized that. I exited the trade at 226, and I minimized my loss. And I kept my risk minimized, and that's very important. But companies report earnings at different times of the year, different times in the month. Primarily, it's quarterly. Some companies are set up differently. But if you know how to enter into stocks before they break out into new heights, that's what we call playing the breakout. Right when the company reports earnings, you buy 2, 3, 4, 500 shares. Some people buy 10,000 shares, 20,000. Me personally, I don't like to buy that many shares in the morning if I'm playing the breakout because I like to cut the elephant up piece by piece. Stocks are very volatile when you're playing the breakouts. I wouldn't encourage a newbie or someone that's just getting started to buy 1 or 2 or 3,000 shares because you can go in at $3 and then all of a sudden you can turn around the stocks at 160. And so you need to know what you're doing when you're playing breakouts. Breakouts are not the most common way to build an account if you have a small account because a lot of stocks, they fail. We call it failed breakouts. And a lot of times you may have to enter into 5 or 6, 7 trades before you actually get a stock to break out to $2, $3, $4, $5, $6. That's another side of the coin that many people don't want to tell you. So what we do as traders is we've learned if I'm going to enter in, like I played 2 breakouts. I played 2 breakout stocks today and I didn't get them right. I was wrong on 2 trades today. So notice what I did though. Because I was wrong, I minimized my risk and I got out. On this trade, I minimized my risk. I went in with 500 shares at 229, exited with 500 shares at 226. Went in with 1,000 shares at 288, exited at 287. So again, this video is what do you do when a stock fails to break out? When you see that it hits key levels of resistance. For example, it goes up to 240 and you buy around 238, 239. If it starts to dwindle back down, then you cut losses. Like you would cut losses, you would set a stop loss or create a mental stop loss and get out between 235 and 238. Now, I will say this, be very smart when you're playing breakouts. Let the stock neutralize, let it consolidate. I don't enter into trades when they're going faster than a cheetah running. I mean, that is gambling. You don't want to enter into trades. A smart trader recognizes how to enter into a stock that's volatile. Now, remember that there's a difference in rhythm and volatility. Rhythm is just the flow of the stock. If the stock is moving fast, if it's going up or down, if it's real fast, if it's going so fast to the point to where you really can't get a good entry, you don't want to enter into stocks like that. But you still want to find stocks that are volatile, that have a spread or a fluctuation in the day range or the weekly range of its actual stock. Again, this is Jay King. I wanted to give you some wisdom about breakouts because companies do report earnings, and one of the ways we find the companies, and we sift through thousands of companies as it relates to trades and finding stocks, is we go to research on E-Trade. You can do this, and we look for the market movers. But what we're looking for is we're looking for the top gainers, and the top gainers are just simply basically there's an algorithm that most brokerage accounts have, and they have the ability to sift through thousands of stocks and find the top 15 or 20 different companies that are reporting earnings. So it's very important for you to understand that because there are too many companies for you to find on your own. So make sure you use algorithms. You cannot compete with computers. Computers are trained to think faster than we do. So notice when I click on market movers, then I go to top gainers, it shows me all the companies' earnings. Look at this. They're reporting earnings, and these stocks usually break out into new heights. Some of these companies aren't earnings winners, but these are mainly just top gainers. And so from there, we go from there. And if we decide to enter in, we play price action, momentum, volatility, and volume. I do not enter into low float stocks unless there's news on that stock. But a lot of times I'm looking at the price action, I'm looking at the volume. And pretty much if you choose to enter into a breakout stock, just know that there's potential for that stock to break out, but there's also potential for it to fail. And it's called failure to break out. So if a company reports earnings and the stock doesn't break out from $1 to $4, be ready to minimize your risk on the trade. That's so important. A lot of times people enter into stocks at $1 and they just hold on to it forever, and it goes all the way down to 15 cents. That's not good trading. That's not a good strategy to have as it relates to exiting your trades. I don't care if you're swing trading, if you're day trading, you need to have a system set up that manages all your risks when you enter into trades. Remember, the maximizing the profit is very, very important, but that comes automatically when you learn how to manage your risk. You don't have to worry about profit. When you manage your risk, you protect your account from experiencing catastrophic losses, and that keeps you in the game. It keeps you in the game to expose you to more awesome breakouts. You're not going to be exposed to some of the awesome breakouts that happen as a result of companies reporting earnings if you keep trading without skill. And the biggest thing I see is people not minimizing their risk. That's the biggest thing that I see. They enter into trades at $2. It goes all the way down to 40 cents. They could have got at it 198, 196, but they choose to hold on to it because, see, the stock market has the ability to get pride out of you. If you really have pride on the inside of you, start trading, because you have to learn to trade with rules. You're going to have to learn to say, I'm wrong. I was wrong about the trade. I'm exiting. And so that's something that you're really going to have to develop in. If you want to be a good trader, you're going to have to maximize your profit, but you're going to have to minimize your risk on these breakouts. And so I don't play breakout stocks every day because a lot of times stocks fail to break out. And so I have a strategy. Usually I play 1 to 2 breakouts a week. But other stocks that I play, they're more volatile, and not so much more volatile, but they're more, I guess I would say they're easier to play because they're obvious patterns that I've recognized over the years. The trades are a lot more simple, but breakout stocks do have the ability to run. And so you cannot exit that out of your arsenal. You want to include breakout stocks in your day trading. So find a way to include it. Do research on risk management and make sure your risk reward ratio is comfortable for you as a trader. You need to find out how much you're willing to lose on each trade. You need to be comfortable because some trades you're going to lose. And you have to know going into this trade, what am I willing to lose? Today, I only wanted to lose anywhere from 15 to 30 bucks a trade. And so I thought I did well because I stuck with my rules, only made 3 trades on the premium account, and I minimized my risk on 2 trades, but I got my trades right. The other trade I got right on the 3rd trade, but some traders lose 10 times on each trade, and they may win on one other trade. So, we're doing good. We're learning how to maximize our profit. And, when you lose on some of those trades, I mean, if you're trading 10 times and you minimize your risk, you still can end up in the green just because you practice a strategy that I call risk management. So again, on these breakouts, remember, companies report earnings quarterly. And a lot of times it's different times of the year they report earnings. But when their earnings are reported, it's a reflection in the stock price. And a lot of times it causes stocks to break out into new heights. And if you go to your brokerage account, it doesn't matter who you're using. You can actually find the top gainers. And these algorithms, these are systems that are set up within brokerage accounts. You're able to locate some of these stocks that are entering into new heights. When we say entering into new heights, if you look at the history of the stock, it may be at $1 or $2, but all of a sudden it goes to $4 or $5. That means that stock has entered into new heights. Again, this is Jay King. I just wanted to give you some wisdom about breakouts. They're awesome. I've seen stocks go from $2 to $34. So you want to embrace the power of earnings winners, because it does have the ability to spike stocks tremendously. My biggest gain was Facebook. Went from 28 to about 99. I had a $70 spread. I held that for about 3 years. And then I had another stock that went from 98 cents to $24 that I maximized. And so these things can happen. So again, this is Jay King. Have a wonderful day. And I'm so excited about breaking out into new heights. And so just think about those stocks. You're going to break out as a trader, as an investor, as a swing trader. Just go to the next level as it relates to trading. Have a great day.